Back for another update. In today's analysis, we're going to be taking a look at Sqqq. This is the Ultra Pro Short for the NASDAQ. So if this chart goes down, the stock market will go up, and if this chart goes up, the stock market will go down. You can think of it like that in layman's terms. Now, what I do see over here on Sqqq is an ABC correction. So you have your ABC up. This is your ABC up within your A wave. This is your ABC down within your B wave. And this is this looks like a flat pattern, because notice how we sweep the lows over here. We sweep the lows, and then we also fill, and then we come up for a wave. We come up in a 5-wave move for our C wave. So this would be your wave 1, wave 2, your 3rd, 4th, and 5th wave to the upside. Okay, within this 5th wave, what we have over here is a ending diagonal. So this is your ending diagonal. Notice how the waves are overlapping each other. You see? And then we have bearish order flow here. Now we may come up to fill this gap. We already filled this gap over here, so we may come up to fill this gap. It'll likely be a gap and trap, and then we see a push down. I like how we swept these lows, so we have a break of structure, and then we came up to this inefficiency, but we didn't really tap into it. I mean, we tapped a little bit into it, but if it comes up here, it'll likely just be a wick fill, or sorry, a gap fill, and then we see the push down lower, or we see the push down from here, like that. So this from December 2024, which is when the crypto market topped out at, that was your A wave. This is your B wave back in February 2025, or sorry, December 2024. Yeah, so I noticed that like in the crypto market, like the tops and bottoms in the crypto market are usually coincide with the broader markets. So now that we have a top here on Sqqq, or a potential top, it's very likely that crypto should see a rise here as well. We also filled in this gap. So this was a Fed meetings gap that we had right over here. This in 17th to 18th of September. We just came to fill that, and then we also filled this bearish breaker. So this bearish breaker block, and then we also came up to the 50% fib. You see how we came up to the 50? Now the definition of a dead cat bounce is you come up to the 50% or nearly up to the 50 and then see the reversal from there. This actually reminds me a lot like the DXY, right? Where you have a sweep of range lows, a push up above the range. You see the DXY, it's the same thing. I'll show you. Sweep of range low, and then a push up above the range, and then a retraction back down. So it's just, you can think of it like that. It's just a deviation. So now we would be targeting 32.8, which would be the range high. That would be sitting at around the 50% as well. So the 50 to 61.8% fib is where we would be targeting for our next point of interest. Okay, now how would that translate to the NASDAQ? Well, it's likely the NASDAQ is going to come back up to re-tap this historical trend line over here. it's likely going to come back to tap it. If this was the real crash, or if this was the real top, it's unlikely that the NASDAQ it would take this long. It would be a much faster move to the downside, and we would also see a lot of sell volume pop up as well. So if you take a look at the volume, like you see, it's pretty low here, but like it would pop up on the you would see reflecting on NASDAQ. It moved back up to 22,748, which would be this historical trendline support. We would likely top it as resistance, but there is a possibility it has a pop up like that, and this was just your trendline liquidity. So it was taking out your trendline liquidity, and then we see one more push up like that, and then we come down very rapidly, more rapidly than this. Like that. Now, if we want to get into specifics, this is where I think it will come up to. Right over here. We just add these fibs here, and then I can show you guys. So right here, like that. Yeah, so the 88.6% fib at 22,000. And then yeah, so yeah, it's likely we'll see the top here. Like we'll see the top at around 26 to 27K. But yeah, that's NQ. We can take a look at the Russell 2000. Russell 2000, we called the bottom perfectly on the Russell. In the last live, this is just a wave 1 leading diagonal. This is your ABC down for your wave 2, back down to structural support, and back down to the 50% fib. You see how we came down to the 50 right over here? So this would be your wave 1. This is your wave 2. And you have a third, fourth, and fifth wave to the upside, like that. This is your ABC down. And this is your ABC up. Okay, so something like this. Okay, and you even got an overthrow here as well. This is your overthrow right here. This is your danger zone right here. And then these would be the wave 4 fibs. It'll likely be very shallow. Okay, something like this. And then this would be your A wave, your B wave, and then you have a C wave down like that. Okay. And then I think that the crash will be like something like it'll look like a slingshot. That's what I'm thinking. Like once we get to the extreme point right there. Okay, it'll look something like this. Okay, and then this is your Wyckoff range right here, and basically we're looking for what's called a upthrust after distribution. So this is your danger zone here. Okay. And also something I noticed about the Russell is that it took out this low on the Russell 2000 futures. I think this was the last low to be taken. Go on the hourly. You see these equal lows? That was your last low. And we may come down to fill this gap, but yeah. Okay, so I think this was your last low. This was your deviation. And then from this low, we're up by over 6.2%. So it's likely we're going to see a very nice rebound. And then same thing for the S&P 500, right? It's going to come back to the historical trend line like the NASDAQ. And we also have confluence with the daily RSI. When we take a look at the RSI, we can even take a look at the 200-day moving average. You can see that we're just consolidating under this 200-day. So I think there's going to be one more push up here. There's going to be one more push, and then the weekly RSI is going to come up to this level, because now on the RSI we're below the mean. We're below the mean over here, below the equilibrium. So it's likely we're going to see a rebound back to this trendline resistance, while the S&P 500 makes a new high above its historical trend line and then tops out from there. So I hope you guys enjoyed the video today. Before I end the video, I just want to take a quick look at the VIX. Something that's very important, measures the volatility in the markets, and we actually called the top here perfectly in the Discord. This was the top over here, and I think we're going to come back down to this region at least. Okay, and that would be also the 200-day moving average sitting at 1721. I hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out and take it easy. See you in the next one.